Good morning, everybody. Happy Monday to you. It's August 21st, 2023. Great to be with all of you today. My name is Bob Lang, and it's time for our daily bites. We do these every Monday and Thursday morning, roughly around 8:30 a.m. Eastern time. Talk a little bit about what we just experienced in the markets the prior week or two, and what's going on right now and what we can probably expect later on into the future. So a lot of stuff going on this week. It's a big week for all of us. To pay attention, to watch what's happening in the markets. We're kind of in a transitional period right now. And we'll see if some of the bigger news events this week are going to push the markets a little further down or reverse back up and reestablish that uptrend again. So let's talk about markets here. So last week, obviously, a pretty dismal week for equities. Down close to 2%, roughly across the board on the S&P 500, the Russell 2000, and the Nasdaq. Dow Industrials took it on the chin as well too. One chart I wanted to show you up here is the Russell 2000 IWM, which we've talked about quite a bit as an index that tends to lead the markets whether they're going up or down, right? So this is a broad index of a lot of different sectors, 2,000 stocks, or small caps, of course, 2,000 stocks though. So you get a good read on breadth, and breadth has been absolutely atrocious for a while. And I'll show you how bad the breadth has been. We take a look at Larry McMillan's report from last week, and I'll show you the table as well. Take a look at the breadth here on this table here. Over to the right hand side, look at all the red since the and this goes this is an accumulation from the end of July, which we had a couple of good readings into the 31st. But since August 1st, red, green, red. And of course, Friday was green too, but it was barely green about 350 issues. So all we're seeing is very, very large red bearish breadth numbers on the stocks only iteration here. So what does that mean? That means that there's been a lot of selling going on, and it's likely to continue until that turns around and we get some green numbers. We had a lot of green numbers in July. As you can see, towards the end of July, we had green the last four. A lot of green numbers in July, and the markets were moving up, following all those green numbers. But now we've had a complete shift in breadth, and it certainly probably comes along with the downgrade from Fitch on the U.S. debt, which came in on August 3rd. So it's probably no surprise that we've had some of these poor breadth numbers. As interest rates have started to rise, people have realized that, you know what, maybe I don't need to be in high risk assets such as equities right now, especially after such a strong year that we've had in 2023. Of course, that's relating to the Nasdaq and to the S&P 500. S&P 500 is still up about 14.5% in 2023. Nasdaq up about 34% roughly. Dow Industrial is about 4%, and the Russell 2000 about 5.5%. As an aside, the explosive options portfolio, which was down quite a bit in the first half of 2023, is now ahead of the Russell 2000 and the Dow Industrial. We're up almost close to 6% in 2023. We had a great week last week. We were up about 0.75%, where the S&P 500 and the rest of the markets were down. So we've had some really great outperformance versus the market. July was just an incredible month for us. We were up 22% in the month of July, and it was a great move for us, not just in calls but also in puts as well. My camera seems to be moving around here. So that's the breadth number. So I also wanted to show you this chart as well. This is called the NAMOT. This is the Nasdaq McClellan Oscillator, right? And it's something that I showed in a different format on Thinkorswim, but I'm showing it to you today on stock charts. And just a little bit of reference point. So this reached a deeply oversold level last week and bounced a little bit on Friday. And we talked about the reasons why it would bounce on after Thursday's daily bites, right? And we talked about the reasons why is because there aren't enough issues in the Nasdaq or the New York Stock Exchange in order to get the oscillator back to zero. So basically, if you think about lowering the bar was all the way down to the ground. So it really didn't take much effort to get a positive reading on get the oscillator moving back up. And of course, the oscillator did move up a little bit because the breadth was a bit positive. But even if it was negative, we still would have seen a positive move in the oscillator. So it's not taking much effort here. From these deep oversold readings, we often see very, very large moves upwards, very powerful rallies that come. I don't know when it's going to happen. I don't know if it's today, tomorrow, later in the week, whatever. But we often see very, very powerful moves to the upside, at least for a day, to get right back up to resistance. Now, I mentioned the Russell 2000 having made a move down to the 100-day moving average right over here, which is the gold level over here, and also the 200-day moving average here too. They basically merged here. So we're right down to very, very strong support, and we bounced off of it on Friday. So we'll see what happens today and tomorrow if that support is going to hold. If it's not going to hold, we have a gap all the way down over here at 175 and change that needs to get filled, and it's probably going to get filled pretty PDQ, pretty darn quick. And we have some support levels down over here in the low 170s here. I'm sure people who are following markets really don't want to see that happen. But as it relates to other indices, look, the S&P 500 or the SPY is making a run towards that 100-day moving average, and it's going to follow the Russell 2000 all the way down, right? The Nasdaq as well is making a run towards that 100-day moving average, just like the SPY, right? 347 and change, call it 348. That's another 10 points down. Of course, it's going to be up this morning. We're seeing a little bit of a rally on markets today. We're seeing the SPY up, the Nasdaq up a little bit, up 16 handles over here. Nasdaq up 87, and the Dow up 65. But we did see the VIX up a little bit, and the VIX futures are down. They're coming together here right now. So if we do get the VIX, now let's step back and look at the volatility indexes for a minute, okay? The VIX cash over here, 1773, ticking up here. If it gets above this 18 level, or whatever the VIX future is, that's going to work to start inverting the curve. And I think it seems like the volatility players are getting themselves ready for some heavy selling, which might occur following some big earnings this week. We have NVIDIA coming out on Wednesday after the close. We also have Chair Powell is going to be speaking at the Jackson Hole conference on Friday morning. If any of you remember, a year ago in the Jackson Hole conference, Chair Powell made some very pointed hawkish comments to the crowd, and the market sold off in a nasty way. I mean, I think we were down about 140 handles, so roughly 5%. And it started a slide in August that led to those October lows just 2 months later, right, all the way down to about just under 3,500 on the October lows. So is that going to happen again? I don't suspect it'll happen. Lots of change. A lot of things have changed since that speech in 2022. And it seems like inflation's gotten better. Certainly supply chain issues have gotten better. But inflation is still hotter and higher than the Fed would like it to be. We have also seen growth starting to improve. First half of 2023, roughly 2% growth. And we've also seen some estimates that this current quarter that we're in right now, Q3 of 2023, is growing also at a very, very high rate of high pace. So maybe 5.8%, and that's what we see from the Atlanta Fed GDP now. Of course, those numbers are going to be changing. We're about halfway through the third quarter right now. We have another 6.5 weeks to go. Of course, we're coming into a very seasonally weak period in 2023, which is the end of August, and into September and October. Remember something: October is often a month where we get crashes, but it's also a month that we often stuck market bottoms, right? So 1987, 1990, 2001. Also, we had a little bit of a bottom in there. 2001 and 2002. We've also seen bottoms come in. Of course, in 1929, that was supposed to be a bottom there as well too. So we do have, October is notoriously a month for market crashes. If you're looking for a crash, you're not going to get it. It just, once something that happens, you got to be prepared for some heavy volatility to come into the market. So we're seeing a little bit of another bounce here today in energy names. I see ExxonMobil is up strong today. We have a nice push up in Chevron and a couple of other energy names. The XLE, which is the energy ETF, is strong as well too this morning. So look, I'm going to say it again as I did last week. This is going to be a real choppy week again, but probably next week as well too. We won't see a lot of good volatility coming into the markets, and maybe some positive energy coming in until well after Labor Day. Don't count on the day after Labor Day for everything to, the engines to start rolling again. Look for some patterns to start developing. Pay attention to the action. Pay attention to what's happening with breadth and with put call ratios. We've seen. I've showed this chart before as well too. Take a look at this. This is the bottom right-hand column. This is the internals that I look at every single day. The bottom right here, look at this rise in put-call ratio. What is it telling you? What is the message of the rise in the put-call ratio? The message is that we're seeing big institutional players starting to buy protection. We've seen a rise in volatility as well too. I've showed you the VIX having risen sharply off of the low 14-15 level. It's up to 17.75 now. If we get it up to 20, that puts us in another playing field. But take a look at this put call ratio. This put call ratio is telling you something, that people are buying puts in the market, right? And if big players are buying puts in the market, they're worried and scared about something, right? They don't know. We don't know what it is, but they're worried that the markets are going to come in even further. Okay, this is not yet a buy signal. This is not your contrarian buy signal yet. Okay, hopefully you understand that. We have quite a bit of earnings coming out early in the week here. We have Lowe's coming out tomorrow morning, Baidu, B-I-D-U, Macy's, Medtronic coming out, Dick's Sporting Goods, Canadian Solar also coming out tomorrow morning. Today after the close, we'll have Zoom, ZM, Fabrinet, and then also a couple of other motorsports coming out as well too. So, quite a bit of possible moves, reactions to some news and some earnings as well. So I'm gonna say it again. Just play it close to the vest this week. There's nothing you really need to do to try and take advantage. I think in my estimation, trying to game Nvidia here is a very difficult task right now. If you have some Nvidia, great. Maybe sell some, maybe take some profits. If you've got calls or puts and you're playing for a directional move over here, good luck with that, because the options market is looking for a huge move. And I think if you have a lot of people lined up on the call side, a lot of people lined up on the bear side as well too, on the put side, you're unlikely to get some big movement. Now, as it relates to Palo Alto Networks, I know they reported earnings after the close on Friday. There's a lot of people out there who thought, oh, well, this can't be good. Well, of course, the company is releasing the earnings. They know what the sentiment is gonna react and respond to. It was a good, strong number, and obviously the stock is up 10%, and it's reflecting a lot of people who were bearish coming into that number, because just for the fact that they're releasing the earnings on Friday night after the close. So. I didn't see it. I didn't see that there was a problem with it. I even mentioned it in the room and to some other people in the room that it's probably not going to be a bad number, right? Just because so many people are assuming that was going to happen. So that stock is up almost 10% already this morning. Splunk is later out this week. Intuit, Affirm, Ulta, and Workday, along with Nordstrom's later on this week. So we'll talk about all those on Thursday. So for that, have a great day, everyone. Trade well. And if you're in the chat room, I'll see you a little bit later. Oh, and by the way, don't forget, Deuces Wild is still going on right now. And what is Deuces Wild? Deuces Wild is the promo that we have going on until the end of the month, and it allows you to get into all 3 services for 2 weeks for $22, right? $22, 85% savings over here, and you get the trade ideas that I put out there in Explosive Options. You get the trade idea that Sam puts out in Spread Trader, and you'll get access to our chat room, which is just a phenomenal place for everybody to pay to learn and to make some good money trading. I mean, for 2 weeks, if you can't make $22 in a couple weeks, I can't help you. All right, if you can't do that, it's pretty much a no-brainer. So I hope to see you guys all there. Have a great day, everyone, and I'll see you guys all on Thursday morning. Take care. Bye.